Investors around the world are waiting to see what comes out of the G20 summit, and more specifically, the meeting between President Trump and Chinese President Xi Jinping, which will take place at the G20 Saturday. Joining us now is Stefanie Miller, analyst and co-founder of Sandhill Strategy. Stefanie, good to have you here, first time on the move.
Yes, thank you.
One of the things that hasn't gotten a lot of attention, the Steve Mnuchin misquote over at CNBC, or not misquote, but the issue 2-3 months ago that was holding everything up was verification,
right,
and also whether or not we would keep the tariffs that are already in place even if we had a deal.
Yeah.
That's got to come up at the meeting, don't you think?
I would have to think that in a perfect world for China, all these tariffs that exist get yanked. The threat of what they're calling the fourth tranche on $300 billion in new tariffs never take place. And, you know, the two leaders have saved the day. That would be the best case scenario. I think investors are not expecting that as the best case. The most realistic base case seems to be no additional tariffs. So not repealing or rescinding the previous tariffs, but not reinstating or instating new tariffs. I'm very skeptical that is going to be what happens. I think the two leaders have a lot to negotiate and a lot of positions that are immovable on both sides. And so to me, it seems like we should all kind of brace ourselves for another round of new tariffs.
So if that's, sorry, go ahead.
Well, if that's the case, are markets too optimistic?
I think so.
Yeah, we've been talking about
So what happens then, I guess, is the question, right? So if the base case is no deal right now, maybe new tariffs, as an investor, do you get more defensive? We've already seen something of a rotation in defensively, right?
Right.
That means those things are getting pricier.
Well, going back to what Mnuchin said, being 90% of the way there, or whatever it was qualified, I think that's right. You know, I do think they're most of the way there. I just think it's the remaining items are really, really hard, and so I think that investors' reaction to that was a sort of sentiment that indicates to me they want to be optimistic, and so maybe if. You know, it's really hard to know how the street's ever going to respond, but investors could just be very relieved if, you know, the two sides are able to have some sort of a productive meeting, say they're going to keep working. You know, because no one's expecting the deal, the bar has shifted a little bit, and so it's really hard to know exactly how disappointed they'll be. The other thing is that Trump cannot institute this next round of tariffs until July 2nd. That's a self-imposed administration deadline. So we're going to find out after the meeting, which is actually tonight, New York time, around 10:30, I believe. We'll find out how the meeting went, and the market will have all weekend to.
How do you see this ending?
I mean, very skeptically, and I live in Washington, so I'm extremely skeptical. We get a deal right before the election.
But obviously, this trade war has been going on for a year. So how have investors been protecting their portfolios? They've been avoiding companies with exposure to China? What have you seen?
Yeah, I mean, that's a great question. It's hard to find an industry that isn't exposed. We're in a global economy, and we've been moving towards globalism for 30 years. So I think it's more just trying to anticipate what that final resolution is going to be, but also, you know, market sentiment is as important as reality of our situation. And sentiment right now, to me, is we want to be excited because the economy is okay, and we want to not just abandon hope that our globalism is going to fall apart.
On that optimistic note, analyst and co-founder of Sandhill Strategy, Stefanie Miller, thank you for joining us on The Move.